We have some really great news to talk about with the Austin housing market. Let's dive into December's data and let's jump in right into the long term growth of what's happening, right? So, people are saying what's going to happen in 5 to 10 years versus the immediate future because we're all seeing values kind of level out or have a decline, more of this kind of historical trend. And what we see is in the next 5 to 10 years, there is a high probability of appreciation both in Williamson and Travis County. The closer you are to a value of 100, the higher probability that it is that you're going to have higher appreciation. So that's what you're seeing. Williamson County are seeing a greater value, 71, compared to Travis, 65. Very close. This tells us, yes, it's going to be going in the up direction of prices and values overall. Then, if you look kind of hyper focus with the zip code, you can see. Pause this screen if you'd like. You can zoom in. You can see how there's different areas that will have stronger growth versus other areas with a little bit of weaker growth, like that down southeast area, immediately downtown. And the question might be, well, why immediately downtown? That's likely due to the condo market. The condo market does take quite a bit more time to bounce back and it also has a slower growth rate versus your single family residential properties, which is outside of that immediate downtown area. So this makes a lot of sense, and this should give us confidence. We already knew that, look, we're in this kind of lull in the Austin market, but projecting out, forecasting out 5 to 10 years, there's a lot of promise. Now let's look over last month's data, and we see that days to sell is about 79 days, right? We're right on kind of track for that 80-day mark, and it's been expanding as we have gone into the winter months. Very normal, very historical. New listings were at 4.63% decline. Close price to list price ratio. This means if you wanted 500,000, did you get it? The answer is no. You received 91% of that 500,000. Now, when you compare this to just really the overall rest of the market, you'll notice that we're typically at 94%. And I'm going to go into more details in the next slide and explain what that means. But listen, you're not going to get your 500,000 as a seller. You're going to get less. The median list price is at $425,000. Median close price, again, 425,000. Our active listings are at 15,082 with 2,185 sold listings. So only 13% of the market selling. That means if you're a seller, you're not going to see all these listings go off the market. You're going to be on the market longer. And as a buyer, you're going to have a really great opportunity of a purchase with negotiation capabilities. There are 72% more active listings, so about 6,200 units more compared to a normal market versus pre-pandemic. We now have 7 months of inventory. We were hovering about 6 months here during the summertime. Now we're at 7 months. And in the winter months, we do expect that to increase. And that means, well, it's going to take a little bit longer to sell. Number of homes that are resale homes that are selling, pause this because if you're in the luxury price point and you're above that 3 million, listen, you only have 6 homes selling. That's it from last month. So a 2.9% chance of selling. If you're between the non-luxury, so you're at that up to $500,000, you're about 17% of property selling. Historically, we're above the 24% mark. So this does tell us that there were fewer buyers buying in this price point, at least in November timeframe. But it's really telling, it really is a great little snapshot on what's happening with our history. Sellers, here's where I wanted to go into more detail. So 94% again is where we would typically see the close price to original list price ratio. We're at 91%. So that tells us that as a seller, you should expect to negotiate more than what you would do in a typical market, right? So if it was a balanced market, you would be usually negotiating less, but not as great as we're seeing today. So again, pricing and strategy really do matter, even for updated homes in desirable neighborhoods. We are in a seller's market compared to 2015. So that's also a very interesting point. Not really a lot of information from that, but look, we're 10 years ago in which we're hovering. So don't expect that the selling trend should bounce back in just 1 year. It's going to take at least 2, maybe 3 years. So why is this taking longer to sell as a seller? There's more active listings, obviously, and 14% fewer buyers. That's not bad. So all the buyers we would typically have in a November market, only 14% fewer. You're almost at a normal selling market for the amount of buyers we would typically see. Why you're feeling the pain is because you have more sellers than you've ever had on the market. So that's why we have a healthy inventory. So it's a lot of competition. If you're in a great location, great condition, and you're priced competitively, that's the word competitively, not fair, but competitively, you're going to get it sold, right? Expect the buyer's market for the next 2 years. And if you're in the luxury price point, 80% of sold listings are between $1 million to $2 million. So this is about 129 units sold. If you look at the big picture, when you're looking at 2022, 2023, 2024, 2022 and 2023, this number is very, very similar. So we're hovering about the same units sold in luxury between $1 to $2 million, and 80% of all of those homes are between that price point. So you have a high probability as a seller to sell your property versus 2 million. I'm sorry, versus a $3 or $5 million unit. It's going to take a lot longer and a lot more competition. You do have 1,113 active listings. So we know that one in every 10 homes are going to sell within the luxury world. Buyers. We do have steady inventory. Wonderful to choose the home that you really desire, the lifestyle you desire. It's a great time to buy because this is not going to be a forever market with our values. And 91% close price to original list price ratio. Again, that means as a buyer, you have great opportunity, exists at almost all price points, including luxury, to really negotiate a great deal. Homes that are priced competitively and in a great location will go quickly. I'm sure if you're active on the buyer market right now, you see that. You may have noticed a home that you love and suddenly there's 4 offers on it. That does happen. Expect interest rates to continue to be in the sixes for 2026. And even with price adjustments, home prices are pretty steady right now. Correctly priced homes are receiving multiple offers. We already mentioned that. Don't buy unless you plan to be in the property for 3+ years. So if you think you want to sell in the next 1 or 2.5 years, don't buy. You'd be wasting your money, your investment. You will actually lose money if you sell. Buyers that are willing to buy, I'm sorry, buyers know that the sellers are willing to buy the interest rate down to get you into the fives. So if you have any questions at all, you're a past client. By the way, past clients, you've noticed I look a little different, right? My head. I just had a hair transplant 2 weeks ago. So I'm going to be in the ugly duck phase. And reach out to me. I love you guys. But you'll see this progression. Anyways, if you're a past client, you have questions about what's happening with the market, you can reach out to me. If you're somebody who have never interacted with me, you're welcome to reach out, ask any questions. But until then, we'll see you next month.